Hope you enjoyed that. I'm sure you did. Let's move it on. Inspiring stuff. Let's get on to our next panel discussion. So much content today. Hope you're having fun. Please engage. Please continue to fire questions our way. Tell us where you're from, who you are. Tell us which panelists you're addressing your question to. Okay, we've got a panel looking at banking on sustainability. Is the financial sector doing enough? I'm going to invite Sunil Missa, the Chief Executive of Accountability, to join us now. Sunil, the stage is yours.
Well, good morning, Mark, and thank you for the kind introduction. And most importantly, thank you for your masterful chairing of the entire event. It makes it a lot easier for us guys to follow. First of all, I'd like to start by thanking the Climate Action Group and the United Nations Environmental Programme Finance Initiative for hosting such a timely and a relevant event. And specifically, given what we're facing and the events that have led up to today over the course of the last year, this is a very, very useful contribution and discussion. By means of introduction, as Mark said, my name is Sunil Missa, and I'm the Chief Executive Officer of Accountability. We are a global consulting services and standards firm that focuses exclusively on matters of sustainability and ESG. We've been in business since 1995, and we help organizations of all sizes across the world, across industries, improve their sustainability and ESG performance. But the most important thing today with me are my panelists, right? And I'm absolutely delighted to present an all-star cast of panelists that we have. And we have one of them who's had a few technical problems, but she's going to be joining us on phone. So I'm going to start off by giving you their names and their organizations. We have Sylvie Prier, who is the group level head of sustainability, ESG, and corporate responsibility for Société Générale. Hello, Sylvie.
Hello.
We have Slavka L.A., who is the head of banking markets, innovation, and products at the European Banking Authority. And on the phone with us, we have Alina Kamencer, who is the head of the climate office at the European Investment Bank. I am saying hello to you, a very good morning from chilly New York City, from our offices at Madison Avenue. And I'm sure all of you are experiencing much better weather than we are in Europe. I think Sylvie and Slavka just told me that. But before we jump into the questions, I just want to be sure that we have, I'll reiterate the rules that we had for the session. We're going to kick the session off with a brief 2-minute introduction of each of you that you will share with us. And most importantly, the role that you perform, the job that you do. What does it entail? After which, we will go through a series of questions that we have prepared together, all of us, and socialize based on your perspectives, your thoughts, your policies, and your experience, and address those questions. In the meanwhile, we will also accept questions from the audience, from all parts of the world that have tuned in. So a very good afternoon and good evening to you in the Middle East, in Europe, in Asia, wherever you are. And we will link these questions to the discussion at hand. So in no particular order, Sylvie, if I may have the privilege of starting with you, and we'll follow with Slavka and then with Alina. All yours, Sylvie.
Thank you. Welcome. So very happy to be with you from Paris. And just in few words to say that I'm the head of CSR for Société Générale, the bank in the red and black, international bank with European roots. We are 130,000 people throughout the world in more than 60 countries. We are having 30 million customers around, and we are based, of course, in Europe, but also in Asia, and in Americas. And something specific is also that we are very long-lasting player in Africa, which is a strong push and historical network for the bank. So hello everybody in the world. So first of all, as Sunny asked me to say a few words on myself, I'm having a mixed background of business and HR. It's half-half in my 30 years long-lasting experience. Before I took over my position as global head of CSR for the group, it happened that I was the DHR for the investment banking of Société Générale. And let's imagine that I was managing 20,000 people in more than 50 countries. And when I had the discussion with our CEO on the CSR new role, our CEO being Frédéric Oudéa, Frédéric told me, you know, Sylvie, you will take over. I will promote you as top 60 of the group, very strategic role, but your team will be a very small one, 20 people, coming from 50,000 people I was managing. And he said, you know what? You will make it with these 20 people, very smart people, you know, very smart team, very expert and so on, because my governance, which is a very demanding governance, is that all the banks shift to ESG, all the bank. This will be the responsibility of the business heads, of the business country heads, to make it happen everywhere in the business, in the countries, to shift the global bank in all our countries, that ESG is at the heart of the business with our customer and at the heart of the strategy. So I said, wow. And 4 years later, I can tell you that this very demanding governance is going ahead, because last year we were ranked number 2 worldwide as a bank under the global ESG dimension. That's a quick introduction for you. Thank you, Sunny.
That's an excellent introduction. And we have to talk someday about the transition from thousands to 20 very smart people. We should coach the organization. Without any delay, Slavka, would you kindly introduce yourself, please?
Sure. No, good afternoon, and thank you first of all for inviting me to speak at this event. I very much appreciate it. So I work at the European Banking Authority as the head of banking markets, innovation and products. So let me say also a few words about who is the EBA, who is the European Banking Authority, and then who am I and what is my role. So the EBA is a regulator for the banking sector in the European Union. And what we do, we call it a single rule book for banking regulation and supervision for all EU countries. And the overall objective we have as organization is to maintain financial stability and well functioning of the banking market. So we are primarily a regulator. My background and my current role is I have a background in mathematics and management, but then I have been a long-term supervisor in all different fields, and that led me gradually to move into the regulation. So my current role at the EBA involves leading policy development and regulations development into main 2 areas, which I would like to highlight. It's a digital finance and sustainable finance. They might appear as 2 very distinct areas, but they're actually very closely connected, as these are the main 2 innovative trends in financial services. One is innovation driven by technology, and the other one is innovation driven by the need to transition to more sustainable economy. So what do I do more specifically? I cannot impress you with numbers as Sylvie did of those thousands people, but I'm closer to her role at the moment, so to lead around 15 to 20 people rather in this role. But what we do are 3 main things. So we define the clear regulatory and supervisory approach to climate risk and ESG risks more generally, which then banks as Société Générale will implement and which supervisors will implement. We monitor ESG risks in the banking sector and try to understand it from the risk perspective. And then we design market transparency rules related to the sustainability. So for me personally, sustainable finance is one of the most exciting areas of regulation I have experienced, because that involves the role of finance with the effort to save our planet. And I will stop here. Thank you.
That's a very impressive role. Slavka, thank you so much for the introduction. I will move over to Elena next. Elena, can you hear us? Elena? We may be experiencing slight technical difficulties. So, we will wait when Elena comes in. She will join us. But I can assure you she has an equally impressive background. She is the head of the climate office at the European Investment Bank. And I'm sure once she gets on, she can give you some context about her role and her background and what she does on a daily basis. But before we jump in, I'm going to ask a set of 3 to 4 key questions. And they are big thematic questions. And of course, your perspective is what's important, because your perspective in terms of where you stand on issues fundamentally depends on where you sit. And where you sit is slightly different within the financial sector. So the first question is about diversity and inclusion. As recently as December of 2020, NASDAQ filed a proposal with the United States Securities and Exchange Commission, basically to adopt new listing rules regarding to board diversity and disclosure. Now, as all of you know, the proposal in simple terms would require all listed companies to have at least 2 diverse directors. And what's more important is if they don't have 2 diverse directors, they will have to publish an online explanation of why they don't. Okay. Now, it's not about a singular proposal. And the diversity was explained in terms of certain categories, female, minority, Latino, Black, Asian Pacific Islander, and of course, LGBTQ, all very, very critical categories, right? My question is, even in 2012, if I recall, the European Commission had proposed some legislation to increase the number of women on corporate boards. But it seems that the whole movement has picked up a significant degree of momentum now. So if you were to look at the top of the pyramid, which is, of course, the directors and boards, but go through the entire pyramid, how do you think financial services have done as an industry sector overall? And specifically in terms of inclusion, please broaden your lens beyond gender, because it's a much bigger topic. But how has the financial services done with respect to inclusion? And more importantly, could you draw the linkage between performance and inclusion, performance and diversity, performance and actual behaviors affected and impacted by policies? And maybe we can start with the person who had to do this for 20,000 people. Sylvie, not an easy job. Maybe you can lead us, of course, Slavka and Elena. And I'm going to take notes, because this is a learning experience. Please.
Okay, thank you, Sunny. I think, first of all, as I am a woman, and I am at the top, or at the top at least, I think that I understand. You see what I mean? Voilà. So, when I used to be an HR, for me, it was a lot about fairness. And fairness with the values, at what we do, on the behavior, and especially on the inclusion side. Whoever, whatever, wherever. Then, when I became head of CSR, what was very interesting for me, because I'm in charge of doing, all this incredible survey with extra financial agencies on the E, the S, and the J, And I was very impressed to see that for these agencies, and especially representing the investors, that, you know, your score as gender performance was a key topic just to assess your sustainability as a corporate. And this was very interesting, you know, to bridge the fairness goal and then the investor approach, which are looking for sustainability and performance. And if we try to have some, to take some perspectives, some big picture, I would say, and especially through the pandemic moments that we are going through, that the world is a very uncertain world. It's a complex one. It's a very volatile world. And that I think that nobody can say that we understand what is going on each time. And I believe that the only way, that's my belief, is that the only way to be relevant, to connect to the world, to try to understand humbly, but being very committed, is to have diversified teams. Because when the teams we have in a corporate reflect the world, it means that we can understand, we can connect, we can make the difference, we can be innovative, and at the end of the day, we can perform and we can deliver. That's why we have decided in Société Générale, beginning by gender balance, to put this goal very clearly at the top of the pyramid, that gender targets, female targets at the top, for the top 30 or top 150, will be 30% female within the global management level by 2023. And this is clearly stated in the objectives of the management of the bank, general management, management committee, in the bonus reward, if you want to be clear. And on top of it, not only we want to be very straight and very ambitious as far as gender balance, but also as far as all diversity, like you were mentioning. I give a last example on LGBTQ. Or for example, last year, I'm very proud on behalf of Société Générale in New York, in Americas, that we were ranked 100 out of 100 for the Corporate Equality Index for our LGBTQ practices in Americas. And, you know, it means that we are keeping the momentum, although it's a very long and still big achievement to make on all dimensions.
Thank you, Sylvie. That is excellent. Slavka, can we pick up on that and give us your perspectives on
Yes.
the broader issue of inclusion and performance?
Yes, no, I would add just a few remarks on the point after Sylvie's more kind of a higher level approach. I was thinking maybe that I can also share very personal experience, for example, how diversity brings a good solution. So the EBA, as we are the EU organization, we have people from all over the 27 or 28 former member states. And it's such an amazing experience when you work with your colleagues from all these different cultures, countries, and they bring a new perspective that I can really see coming from originally from national level to the European level, how diversity brings better solutions. So that's a maybe personal example, but more speaking also on what's being done on the banking regulation side. So, for example, as EBA and also other European organizations, we have directly in our founding regulation the criteria or principle of gender balance when we select the top position. So those are already part of the regulation, as well as for the Capital Requirement Directive, which is the key regulation for banks. We also clearly request diversity and gender neutral remuneration policies. And the EBA, as the regulator, is monitoring, and we issued guidelines on this, and we will be benchmarking how this is being applied in practice. So some very practical examples how it is important and what is actually being done in the financial sector. Sunil, the directive which you mentioned, yes, it was proposed, but it had not been yet completed, as there were some difficulties to get the support from the council level, which are the representative of the governments of the member states. So we will see if we also get the general directive ready.
Thank you, Slavka. No, I think the details are extremely important because it gives you the appropriate context and the grounding of the issue. So it was very helpful to hear both Sylvie as well as yourself. I do believe that Elena, you are on the phone, and if you are, could you kindly join us and give us your perspective? I think you know the question. It is around diversity and inclusion, and is the financial sector doing enough?
Hear me just to
We can hear you loud and clear.
excellent. I was wondering, maybe I quickly present myself and then answer and make a couple of remarks to your comment, so that people know who is on the phone. And I do apologize about these technical problems. It's my pleasure to be with you here today, at least in with the voice, even though you cannot see me. So I'm here today in my role as the head of rather newly created climate office of the European Investment Bank, the Bank of the European Union, created over 60 years ago to promote growth and employment in the European Union and foster and support the EU policies also outside the European borders. We lend or finance our annual financing volume is around out of the group is over 70 billion approximately, and we support it by the balance sheet of around 550 billion. So as an IFI, I think we are the largest, close to the with the same size of the KfW of Germany. So back to my current function. This climate office was created at the end of 2019, and the creation coincided with EIB announcing its ambition to become the EU climate bank. And while we have built a very strong in-house expertise on climate and sustainability analysis and assessment, both in technical and economic terms at the project and investment level, it was felt that if we want to reach our climate-related operational targets that we set ourselves, aligning operations with Paris, meant ramping up our annual lending volume to 50%, the green financing up to 50% of our annual lending volume, and with our intervention catalyze some 1 trillion euros worth of investment over the critical decade. We do need to strengthen our frontline capacities on climate finance and become more effective in operationalizing climate on our financing activities. In this context, I wanted to mention still 2 points. First, that after I started my career in commercial banking, I have built my professional track record by working in 2 multilateral investment banks, EBRD in London and then later on in EIB, and in both which both are policy-driven institutions or bank with a higher purpose, one could say. And my credentials are mainly earned in different front office functions. Before taking the helm of the climate office, I was heading EIB's corporate finance team responsible for 11 Central and European markets. While I do strongly believe and not dismissing the current serious global health crisis, that we are faced with the climate emergency, and we do need to take serious action to avert these devastating consequences that this change may have on our societies. I certainly am not an expert on climate change. However, as there is a real attempt to mainstream climate in EIB's operations more prominently, I want to believe that it was felt that a person like myself, having strong experience in operations and understanding the implications to the business realities and of this climate transition, is best placed to champion mainstreaming climate in EIB. So that's maybe about my background, and then swiftly moving on to a couple of remarks on the question. And for my part, I have 3 points to make. I recently came across a report that said that in the financial services firms, at the end of 2019, 22% of the senior management positions were held by women, and I think the trend has been increasing, but the number is not particularly impressive. What I also read in this same report, that while the C-suite positions are increasingly held by women as well, in the other senior management roles, the share of women is not increasing as rapidly, which may indicate that while there is regulatory pressure to include women or allocate women board seats, the organizational cultural change is not really happening when it comes to gender, as the other managerial roles are still not. The share of women in these roles is not really increasing as prominently. So in that sense, I think there is still work to do there. In EIB, we have made significant progress in promoting gender equality. In 2020, at the end of 2020, we had 30% of the managerial positions held by women, and to sort of confirm our quest to advance gender equality, we also received an EDGE certification earlier this year as a recognition of our efforts. Nevertheless, for me personally, and this is my last point, and also for EIB, diversity is not only about gender, as we already heard and from both Slavka and Sylvie. And I do firmly believe that wider diversity makes perfect business sense. There is already enough research and evidence out there that more inclusive and diverse organizations tend to perform better than the opposite. In the financial industry, among others, we operate in an increasingly complex globalized marketplace. And in my view, it is clear that to succeed, we do need to change with times, solve problems, and offer innovative solutions in an agile fashion to very diverse group of clients and stakeholders. And it is clear to me that organizations with equally diverse workforce will win the race. I have been part of teams that have less diversity, and also those I have led those with lot of diverse talents, and I can clearly say and state that the diverse teams perform better than those with less diverse talent. I'll stop there.
Thank you very much, Elena. I just want to make it clear, folks, we have less than 20 minutes left. We have several questions to cover, and there are some questions that are coming in from our audience as well. So I'm going to ask the next question, but I would request you, if you could keep your comments and remarks to 90 seconds, please, a minute and a half, because we have a lot of very interesting topics, and we want to cover these topics. I'd rather cover the breadth of topics and give the audience what they want, as opposed to go into great depth into one or two topics. So the next question, and maybe we can start with you, Sylvie, but it is recently a very large global public relations firm conducted a survey about trust, competence, and ethics. And it's a large survey. They do this every year. Over 33,000 respondents in 28 countries. And the respondents were typically between the ages of 25 and 64. All of them had a college degree, and they were in the top 25 percentile of their earning bracket. Now, there were lots of takeaways from the survey, but over 2/3 of these respondents came back with a very interesting takeaway. They felt that businesses and CEOs should step in and solve some of society's problems. They felt that government was not necessarily doing a very good job. In fact, they felt governments were doing a terrible job. And they still felt that businesses were more capable than governments, right? And in that context, they wanted businesses and CEOs to do more, to improve societal performance, to measure societal impact, and in general, make a transition from what we typically understand, the role of government versus the role of business. The question to you, ladies, is in the context of financial services, number one, do you think financial services should step in to fill this gap or void? And number two, what can they do? What can banks do? So I'm going to go back in the same order, Sylvie, and then Slavka and Elena. 90 seconds, you're on, pal.
Okay, so thank you, Sanya. We'll try to be quick. For me, it's not a question of competition. It's a question of coalition. It's a question of building together the sustainable future. And I will give one example. You know that recently and yesterday, actually, Société Générale, among other banks, like 43 other banks, representing 23 countries, with a total assets of US dollar 28.5 trillion in assets, we decided to jump into the net zero alliance for 2050, global carbon neutrality, and limiting the global warming to 1.5 degrees Celsius. So just to say that coalition for us makes a difference, and that we believe that building together this future, putting together our methodology as our brain, trying to have the teams building together methodology, standards, having open innovation will make the difference because we speak the same language. We can measure, assess with these standards, either in credit, either in investments, whatever, where we are together, what's the target, what's the step to the target. So I think that building together methodology, standards, working hand by hand in order to have the trajectories as ambitious as possible, and disclosure. I think this is key point that we can try to make together.
Excellent. Methodology, standards, and disclosure. I've written it down. Over to you, Slavka.
Yeah, no, thank you very much. Yes, so I would take this question a bit more from the perspective that while I think we can all agree that the role of the private sector should be also understanding their social responsibility, I also want to make a point that this makes sense also from the risk management perspective, not just from the social responsibility perspective. So this understanding of social impact and the dimension in business that has been present there for a long time, the themes of corporate social responsibilities are playing their role, and all of that was there. But in the context, for example, of the Sustainable Development Goals, and more specifically in the context of the climate change, then there is more clarity between the link between the social responsibility side and financial risk side. So in the context of climate, for example, this is more measured or named as a double materiality concept, where on one side, bank is trying to understand what climate risks are brought to its balance sheet through the clients, through their exposure to climate issues. And on the other hand, bank is looking how its management and decisions and strategy is impacting the climate. And this double materiality concept can also be could be implemented in trying to evaluating social impact of banks' activities, because there are some indicators which are being used, but methodologies are still being evolved in this area. But that's the way how we could also measure the real impact on some consistent basis and then disclose this. And all the disclosures effort are already happening in the EU. But I also wanted to make this link with the risk perspective. So, for example, in the EU context, which I know the most, the European Commission estimates that the annual need of investments to achieve the EU climate and energy targets is approximately 350 billions annually we have to invest within the next 10 years. And so 350 multiplied by 10 and going forward, that really means that only public money cannot finance this, and private funds and contribution of banking sector is needed, especially because in Europe, banks finance over 70% of real economy through loans, which is quite different compared to US market, for example. So this is to enable this transition in different economic sectors, banks need to get on board, and not just because politicians said so, but because all this political and regulatory effort is gradually tightening the environmental and climate-related rules. So with this size of the loans which banks are financing across the EU, it's clear that if they would not support the transition of their corporates or SMEs they finance, then this would bring additional risks to their balance sheet eventually, as many of those businesses would get out of the business for regulatory reasons, and that would bring increased losses for banks. And I will stop here. Yeah.
Thank you very much. This is extremely useful. Ladies, just in the interest of time, because I'm having a lot of time cards being flashed at me, which you don't see, I am going to skip over Elena's answer for this question, but I'm going to address the next question to Elena, and then we can pick up with Slavka and back to Sylvie. My next question is something that all of us are very aware of. It is the question about institutional investors. We are seeing the pressure from institutional investors intensifying and becoming rather consistent over a period of time. All of us have seen Mr. Fink's letter at the beginning of the year. It has been followed up by letters from several other CEOs. But I think the focus has been that institutional investors are pressuring, rightly so, financial services institutions, namely banks, in terms of incorporating ESG considerations into their investment decisions, right? So just earlier this week, there was a group of 35 large investors, and I won't name them here, but they were very large investment management houses. And they were pressuring Goldman Sachs, HSBC, BNP Paribas, along with 24 other banks, basically to stop, defund carbon-intensive projects and start funding more green-oriented projects. Now, clearly, whether this happens or how quickly it happens and the process in which it happens, this is a separate discussion. But the problem that the banks will have is this is a trend. And this is a trend that shows no sign of lessening or abating. So my question would be, what key actions can the financial services sector, can banks be taking towards either redirecting or growing the financing into the green sector? Because the pressure is real, it's palpable, and the options will get narrower and narrower as time goes by. And Alina, may I start with you? We'll still keep the 90-second rule, and then we'll go back across the circle, please.
Yeah, thank you. I am very sorry about this technical problem. Again, I think indeed, as you said, the financial sector is increasingly recognizing the need to support and move towards the low carbon and support the net zero transition to net zero. We see some of the front runners making Paris pledges and discontinuing financing to fossil fuel sector. While it's about compliance and stopping to do something, I think we need to start also focusing on what can be done more. And indeed, the financial sector will play a crucial role in the low carbon transition. Trillions of investments will need to be made, and most of it, based on the current estimates, has to be financed through debt and capital markets. And we see developments there. The banks are realizing that sustainability makes business sense. Products are emerging in the market supporting the green transition. The green bond market has been growing exponentially since it emerged. EIB issuing the first ever green bond in 2007. We see ESG-linked financing instruments emerging and transition bonds. I think what is important is that we bring further transparency into the market to avoid greenwashing, and really also the banks taking responsibility to building capacities in the real economy to promote green projects and move away from fossil fuels, disconnecting the growth from the fossil fuel usage. And again, that's EIB is of course trying to champion and spearhead this development with our current thinking, increasing our climate finance target with 50% of annual lending volume, as I mentioned, by 2025. Thanks.
Thank you. Thank you, Lena. You know what? We'll go to Slavka. So we're sorry, I'm going to ask you the next question first because I've got 3 minutes left. Slavka, you give me a response in 30 seconds. I'm so sorry, but we do want your response.
Yes, no, I wanted to share some very interesting numbers which we had just completed as part of the EBA pilot exercise with 29 banks, which are roughly half of the banking sector, where we on one side wanted to understand how brown or how emission intensive portfolios they have on one side, on the other side, what is the proportion of green, really green. And with these numbers also indicate where the sector is and how much work maybe needs to be done. So what did we find out was that on the brown side, there is approximately over 50% of corporate and SME assets are in this emissions intensive sector, with which then implies potentially higher risk for the balance sheet, or more specifically looking on the greenhouse gas emissions, over 32% of exposures are in this higher range. So that's kind of the scope where they need to decide, is this able to transition and support transition, or is it something what we should eventually exclude from financing? I think that's the key question. Well, on the other side, on the green side, the very rough and first estimate is that what is green in line with the EU taxonomy, EU definition of green, might be around 7% only. So that kind of shows you the gap where banking sector is at the moment. And what they can do, actually, I am much more supporter of transition financing than exclusion, because if the sector you finance if there is a technology which can help transitioning to something more ecologically friendly for a bank and for everybody, it's better to finance that transition rather than stop financing at all. So that would be my key message.
No, I think that's an excellent
Okay.
point that you make of transition as opposed to exclusion. Sylvie, can we do it in 15 seconds? Because you're going to lead the
of
next
course.
question.
So I don't know, we didn't manage to make it this round, but Slavka, I fully agree with you. I fully agree. I believe that commercial banks have a key role to play. First, to greener and have more inclusive development models, but also to accompany and help our clients with our environmental and social expertise to foster their own transformation. So I think, once again, is how aligning our portfolio to the Paris Agreement as commercial bank, we can foster and accelerate the transition of our corporate clients or clients globally. So that's the equation. So just to give in 1 second an example at what we do, but other banks are doing, the climate strategy means on one hand, the exit strategy from coal, for example, 2030 for us, OECD, 2040 emerging. It means, reducing oil and gas upstream by 10% by 2025, for example, to begin, reducing the fossil fuel. On the same time, put on the table 120 billion for energy transition between 2019 and 2023, already 69% achieved, and all around accompanying our clients with this expertise. When there is, a heads up somewhere, we have nobody left on the way, but everybody included for the transition. So it's a very incredible journey, but it's a joint journey.
Thank you, Sylvia. I can definitely see Mark wanting me to wrap up. And Mark, rather than summarize the whole session, because this has been crystal clear, if you could give me 30 seconds, ladies, I'm going to go through all three of you. We don't need a closing statement, but I want you in this rapid fire round. I thought of a few funny questions, but I don't think we have time for that. I'm going to ask you each a serious question. What do you believe is the future of sustainability, ESG, in 3 words? Just give me 3 Google search words in any language. We have lots of wonderful translators here, so that doesn't matter. Starting with you, Sylvie, 3 words, and that should be less than 30 seconds. 3 words to describe the future of sustainability and ESG in this world.
First is culture.
Mm-hmm.
Second is being bold. And third is collective mind. So culture, bold, and collective mind.
Great, perfect. Slavka, you have even less time because you had some time to think. 3 words, please.
Yes, so for me, the future of the banking is digital, green, and social responsible.
Digital, green, and socially responsible. Elena, you will have to put 3 words in 1 word. Please, go ahead.
Okay, so for me, ESG makes business sense. That's three words.
Wonderful, wonderful. Now this has been absolutely terrific, and I could summarize it. We could actually come up with a wonderful article on this. But we have spoken about fairness, we've spoken about values, we've spoken about linking sustainability and performance, and this is why I felt that both Climate Action, UNEP-FI, and Mark, you have made such a relevant and a useful contribution of a timely sort, because this is clearly an idea of our times. We talked about diversity not being just about gender, but it also makes business sense. It is good for business. And what is quite encouraging is that none of you have challenged the fact that the financial sector needs to change. And the financial sector has an important part in the future of this transformation. And that is very encouraging, particularly given where you sit. Now, I can go on for another 45 minutes, but that'll be our next panel whenever I'm there. So right now, let me pass on to the big man, Mark. And Mark, thank you.
Sunny, thank you so much. Brilliantly moderated. Thank you, Sunny. Thank you to your wonderful panelists as well. Love the way you ended that panel. Sustainability's future in 3 words: culture, bold, collective mind. That was 1. Digital, green, socially responsible. That was 2. And ESG makes business sense. What a brilliant way to end session 3 of day 4. Yes, still loads more to come. After a 20-minute break, we've got a bit of this coming up. Far right hand, final session. You can see it there. Tell us what you're doing. It's World Earth Day. Don't forget, tweet it out. Climate Action Live, hashtag, tell us what you're doing. Tell us on the platform as well. Please complete the survey on the platform. You'll have a big impact if you tell us what you think. Give us your feedback about this event, what you want in future events as well. Watch all the sessions on demand, network, schedule one-to-one meetings, visit the virtual expo to set up meetings, to see our sponsors, to meet the partners, complete the survey, register for the Sustainable Investment Forum North America, which is taking place in September. You can find it to register of course, on the website na.sinvforum.org. That's to look forward to in September. We'll be back in about 15 minutes time for part 4 of session 4. See you then.